Hello traders, Cousin Vinny coming to you from theclosingprint.com on November the 4th, 2018. In this edition of your weekend video newsletter, we'll discuss the indices, all of which moved substantially higher after a momentous pullback during the month of October. We finally got a week up. The caveat, of course, is that we have midterm elections here in the U.S. on Tuesday, so the markets could render a verdict that could be adverse to your positions. So be very careful. We're going to be cautious this week. The bond stock ratio is long-term bullish and short-term neutral. It's starting to turn down. Junk and high-yield corporate debt are both bullish but under their 20-period weekly moving averages. The Dow Composite stalled at the 200-day after a nice bounce, and the S&P 1500 is improving and could give us a buy signal if the midterm elections are rendered bullish in its verdict. When I say verdict, I am referring to institutions. If they start buying, it'll be very obvious. If they start selling, it'll be equally obvious. So have a balanced footing this week with all of the leading stocks, for the most part, bouncing, with the exception of Facebook, Google, and Apple, of course. Microsoft was off a little bit. We had Amazon, Netflix, Nvidia, and Intel all higher on the week. Institutional sentiment did turn back up. That's bullish short term. Been making higher lows on the S&P 500 NYSE for the past 12 trading days. We have NYMO and NAMO cycling up, starting a new bullish cycle. If that continues, that would be very beneficial with breadth improving. As we had washout lows last week, we haven't seen since February of 2016. February 2016. Think about that for a second. The breadth and washout lows were beyond what we saw in 2016. Put call ratio did spike last week. 1.34 came down to 0.93, so it's neutral at the present time, turning back up, which could be viewed as trending if we didn't have the midterm elections, of course. We have VIX moving lower but still above its 50-day. VIX VXV dropped substantially from its highs as well, and the bullish percent has turned from 33.78, the August 2015 lows, back up to 39.93. That's trending bullish as well. So it has a long way to go before it's overbought. Same with all of these washout lows in the A50R and 200R on the S&P 500. The dollar is at a double top. The yen is lower, and the British pound US dollar pair 4 months sideways flat, hasn't gone anywhere, which was beneficial for the London Stock Exchange and the FTSE last week as they closed bullish. Yields are higher. The 5 and 10 is at resistance, which makes AGG, IEF, and TLT lower but at support. Gold is bullish in its trend. It's above the 50-day. It did stall, dropped a little bit last week, and then returned back up to the recent highs. Copper is bullish. It's been moving sideways. The last couple of days, it started to bolt higher. And we had West Texas crude for the fourth week dropping off. It looks like it's about to lose a range support level, so watch crude if you're trading any of those stocks. In the energy sector, the heat map turned decidedly green. There's a little bit of limes, yellows, and greens. Most sectors are bullish. That's a mistype. There we go. International markets are mostly yellows and oranges, no reds, but we did have Brazil and Argentina looking very good last week. Watch those South American countries. We'll look at some IBD 50 names, stocks showing relative strength, some MarketSmith Growth 250 names as well. All of them showing relative strength last week, many of them breaking higher. We also have Bukowski with 405 still red, so that's a caution signal. However, his CPI signal went half green on 10/30, October 30th, and it's currently moved from 9.70 severely oversold to 70.70, so that's very bullish for the week. We just need to see how these setups work with 12 bearish, 29 bullish, and 329 patterns waiting for breakout. Bottom line, caution, everything's a day trade unless otherwise mentioned going into the midterm elections on Tuesday. Finally, the S&P 500 spiders did bounce last week off of the lows at 260, ran up 15 points before running into moving averages, the 200-day and the 50 weekly before being rejected. So we hit our targets for the week. MACD still below its signal line, above the zero line, and starting to turn. Volume is starting to pick up. We had two major distribution weeks, and last week we had above average volume, so that looks pretty good for the week ahead. RSI is turning higher, so we want to see follow through. Again, midterm elections are going to decide a lot of things this week. With the recent commentary and news out of China, with the U.S. supposedly discussing again the boy who cried wolf, hopefully this will follow through. We had FXI was up over 5% last week. The Hang Seng was up 7%. As we can see here, RSI severely oversold. This has been the first very big bullish week that we've seen in over a month and a half. If the news continues to be deemed bullish, of course, a lot of those Chinese stocks that we looked at last week will also be moving higher. So keep an eye on them for more bullish follow-through. And if you're thinking long-term, you're probably better off waiting till after Tuesday. Hopefully we'll get a follow-through. We have a long way to go to get back up to 52-week highs. So after the election could be a better and safer entry for you long-term investors. SPY Daily also bounced, as we mentioned, hit the 200-day moving average, a 15-point run off the lows. We got a good part of this with common shares, as you know. Tick cumulative continues to rise. This is actually starting day 13. It reversed on a Thursday back here in the second week of October, and it started to show a divergence which led to follow-through as institutions were nibbling on shares. This is probably one of the best indicators to watch when you're thinking about changing your footing. If you're mostly bearish with a divergence like we saw back in September and starting to look bullish, start being open to a change in direction. When you see tick cumulative change in direction, this is what institutions are doing. The only way this can change direction depends on institutions. So keep an eye on this tick cumulative and tick Q on the NASDAQ, which also bounced last week, 1.65%. But check out the NDXE equal weight index that doesn't weight any particular stock more than another, up 4.45%. Big move on a majority of NASDAQ 100 stocks when you weight them on an equal basis and not on the big cap bang stocks. We also saw the NASDAQ equal weight index on the daily time frame moving through standard deviation 1, the darker area, Bollinger Bands. NDX 850R, number of stocks trading above their 50-period moving average, hit washout lows twice during the month of October, starting to move higher. MACD and momentum oscillators turning higher. And of course, tick cumulative on the NASDAQ has turned higher and bullish as well. IWM also bounced at a support level on the weekly. This could look good. I know Ken likes to trade IWM a lot. Support. The wicks are your support levels and also where the buyer showed up. So that would be your stops for the week at around 147 or so. If you're looking at going long, I'm thinking about taking a position in IWM. I might have to wait until after Tuesday, however, as RSI does turn up. The midterm elections just got me spooked as well. And here is the NYSE looking back to 2016, the bottom that we saw back in February, where we saw the high-low percent at 5%, which was a low we haven't seen in many years since 2009. That's where we were last week, in an area where we would have imagined some follow-through and some buying if it weren't for the elections. So keep an eye on this. It bounced at 382. Looks like it could continue to follow through, and that of course would change the juxtaposition of the 50 and the 200-day overhead in the short term. Much like the NYSE composite of 2,000 stocks, if you take the S&P 1500 composite, the S&P 500, the S&P 400 mid caps, S&P 600 small caps in one index, you can create a buy-sell signal just by looking at the high-low percent. Okay, you can see the symbol there if you're a stock charts member. When this line turns red, that's your sell signal. You can see how we would have been out at the highs on that divergence and had missed all of this move lower, nearly 11%, and how we could have got the change in direction as well. We still don't have a buy signal, but that's okay. The line's starting to turn green already, you can see. So once we have a follow through, we'll know it. Most likely will be after the midterm elections on Tuesday. Wednesday morning, we'll be looking for a green signal if the institutions look at this as bullish, and red again if this is viewed as bearish. That would be one hell of a drop if we saw a negative view of the elections on Wednesday, the results on Wednesday. All the more reason to be in cash and wait for direction. Tractor Supply has been looking good as well. At the top of its range, relative strength line is climbing. Doesn't have earnings until January 31st. Following through, looking very good. This one is opening 80 new stores. That means the company is expanding, more sales, more earnings. Look for Tractor Supply to continue to move higher. Relative strength line is climbing. Infrastructure and Middle America are doing better, and Tractor Supply is capitalizing on that expansion. Verizon also looking for a follow through here. New management, things are looking better. Relative strength line is climbing. A little consolidation above this flat base. Big cup and handle pattern breaking out. Looking for resolution to the upside. We have about a 5% stop on this one. So it'd have to drop back into this pattern, which would probably be met by buyers. So feeling pretty safe with Verizon. Has a really nice dividend as well. Walgreens Boots Alliance recently added to the Dow 30. GE, of course, was kicked out. Walgreens took its place. Continues to trend, looking better. The 5200 cross continues to point to further upside. Could come back down a little bit more, but looking for a follow through nonetheless with earnings out in January. Walmart continues to hold up well. Earnings on deck in the short term. One last thing we'd like to check out. This scan right here, relative strength to new highs in a correction. You can see those names below. What we like to do is rank these by volume percent change. Look at the stocks that are showing the most strength and volume. Big move in HMS Holdings, cost containment, coordination of benefit services to government and private healthcare providers, looking good. VeriSign, moving higher last week. Relative strength line climbing. What I'm focused on is the relative strength line earnings as well. Just check those out. Starbucks we know about. Church and Dwight we talked about. Motorola Solutions following through. Relative strength over 150% change in volume. Above average, we've got biotelemetry, beat, following through. Mikey can tell you all about this company. UAL, United Continental, about to break out of a cup and handle pattern. Mellanox Technologies, following through. Nice bullish relative strength line climbing. Ingersoll Rand, looking like a nice cup pattern playing out. Relative strength line climbing, increasing volume. And Bank Popular, which we already talked about. With the earnings scheduled for this week, as we can see, Roku, Qualcomm, Etsy, all these names that we have had positions or holding positions in, looking for resolution this week. We want to be out of those positions prior to earnings. Okay, traders, it's Cousin Vinny coming to you from theclosingprint.com with your weekend video newsletter for November the 4th, 2018. Bottom line, we're watching what's going on with the midterm elections. We'll be taking day trades only unless otherwise mentioned in the live session or in the alerts channel. We'll send out a watch list later tonight around 11 o'clock Eastern time, so watch for that in your inbox. I hope this helps, and we'll talk to you tomorrow. Have a great day.